Salute y'all. You know who it is. You know what to do. Shout out to my man Larry over at the No Regret Show. Um, and I understand why he did what he did. As a licensed financial professional, I'm getting very frustrated because you have all of these channels like this that are getting thousands and thousands of views talking about the fastest way to $3,000 in dividends per month. So he showed QQQ and SHCD. So I went to ChatGPT just to see how much you would need invested to get to $1,500 per month in dividends, which is about $2.6 million. Don't believe me? Let's look at ChatGPT. I have QQQ. I hit the one by accident. How much do I need to equal $1,500 in dividends per month? Great. You're asking how much money you need to invest in Invesco QQQ to generate $1,500 a month in dividends. Here's how to break it down. QQQ's dividend is about 0.6 to 0.8% annually, and that's very low because QQQ is focused on tech growth stocks, not dividend paying companies. Let's use the zero point 0.7 as a midpoint, right? And then it shows your required investment. Plugging in 18,000 over 0.007 equals 2.571428. So you need about $2.6 million invested in QQQ to get to $1,500 a month of dividends. So all you folks who are, I made all that, you're lying. I don't know if you're lying to the general public or yourself. Generally yourself, trying to prove it to yourself. But the reality is, people like myself, people like JT the Pocket Watcher are licensed professionals. And you have all of these other fly-by-night motherfuckers. They're getting rich off of you spending money on their Discord, spending money on their Patreon, spending money on their Learn How to Get Rich with Me course. And you're not going to get rich. Right? Even if these things were paying 100% dividend, right? You'd still need a substantially massive amount of money invested, right? Reality check. QQQ is great for growth, but terrible if your goal is income. If your focus is on monthly cash flow, higher yield ETFs like SCHG JPI, which is 7 to 9%, would need way less invested to hit that same. So let's see SCHD. If I want 1,500 a month, well, from SCHD, wow, I can't, SCHD, how much do I need invested? Let's see what they say here. So that's the Charles Schwab Dividend Equity ETF is about 3.5%. So you'd still need about 515,000 invested, over $500,000, and that's not the 3,000 that he's saying. So the fastest way to get those kind of dividends is to have millions of dollars, right? Now, what's the best? What's the most logical way to make money day trading, like, let's do 2,000 a month from a cash account, right? Because you're not going to have a margin account. 2K a month from day trading sounds simple on paper, but the reality is layered. A cash account makes it even trickier because of the T+1 settlement. So after you sell the stock, the cash isn't available until the next day. That means you can't wash, rinse, repeat in the same day like a margin account trader could. Here's how people usually try to approach a cash account. Position size, expect a return. Say you're trading with $25,000 cash, which none of you motherfuckers are. If you target 1% net gain per trade, which is ambitious but realistic for a disciplined intraday setup, that's $250 per trade. You'd need 8 solid trades a month to hit 2,000. Problem is, you won't always win 1% cleanly. Losses, slippage, and commissions chip away. Settlement workaround. Many traders stagger their funds. For example, use half your cash on day 1 trades and the other half on day 2 trades while the first half settles. Asset choice. Stocks with higher volatility names can move 1 to 3% in a day, but you need tight risk management. Options cash accounts can trade long calls puts, not spreads, and these settle T plus 1 2. Options offer leverage but also higher risk. You can blow up quickly without discipline. ETFs, less explosive but steadier if you trade momentum or mean reversion setups. Think SPY, QQQ. The real logic: consistency matters more than hitting home runs. A lot of traders aim for 0.25 to 0.5 percent gains daily on a decent sized account and let compounding stack. Risk control: never risk more than 1 to 2% of account per trade. A couple bad trades without discipline will erase weeks of work. Here's the catch: pulling a steady 2K a month from day trading with a cash account isn't logical in the sense of probability. The vast majority of people lose money because the math of small wins versus big losses trips them up. Swing trading, hold positions for a few days, or selling options, cash secured puts, and covered calls might be a more logical way to target a steady 2K per month than forcing intraday trades. Alright? So, there you go. Stop listening to the bullshit. Do what you gotta do. Now, watch this. Does cash value life insurance trade options, specifically IULs? Watch this. No, cash value life insurance doesn't trade options in the way that a brokerage account does. Let me break it down. The premiums you pay go partly towards insurance and partly into the cash value account. The cash value growth is linked to a stock index like the S&P 500, but you don't own the index. The insurance company uses options behind the scenes, like call options on the index, to create the upside participation and downside protection for your policy. This is how they can guarantee no loss of principal during down years while giving a cap on upside. Key points: you can't trade options yourself inside the IUL. The option strategy is entirely managed by the insurer. The credited interest to your cash value depends on the index performance and the participation in cap rate, not your own trading. Think of it like a prepackaged option trade managed by the insurance company. You get the benefit, but you don't control it. So if your goal was active trading or leveraging option strategies inside life insurance, that's not possible with a standard IUL. The growth is capped and protected, designed more for steady accumulation and tax-deferred compounding than day trading. If you want, I'll show you exactly how the IUL option mechanism works behind the scene so you can see why it's structured this way and how the insurance company manages risks. No, I don't want you to do that. But I'm not going to do that. I'm going to end this video here, ladies and gentlemen. Wipe ass, work in progress every day, and see success.